Let's get to Michael Howell, CEO of Crossborder Capital. And Michael, I love the title on the latest piece, Buckle Up, the Coming Shakeout. How deep is this going to be? How long is it going to last? I remember when we last talked to you, you said there was an opportunity here for a rise in equity markets before we got the downdraft, perhaps towards the end of the summer. Is it happening much earlier?
No, I think it's happening absolutely on track. I think if you look at the landscape over the last 12 months, we've been very bullish on stocks pretty much since the pandemic started, with the amount of liquidity that central banks have thrown into markets. Our view was that that would work. It would cause a V-shaped rebound in economies, and you would likely see the first quarter of 2021 being pretty good, markets being largely firm, but there would probably be a setback through quarters 2 and quarters 3 of this year, simply because economies are so strong. And history tells you that strong economies do not have strong financial markets, and we can see all the signs of that with the deterioration in the bond markets and yields jumping. We know they've fallen back a little bit in the last week, but that's markets never move in straight lines. The fact is that yields are heading probably in the US towards a 2 to 2.5% range.
The value trade became very popular for a while, and then people started to speculate that it had become the momentum trade. Now we don't seem to be seeing much upside for either cyclical value or growth. Who weathers this better?
Well, I think the thing is that as I've been saying, I mean, markets will likely see a correction. I think that's beginning now. That may last 3 to 6 months. It may take markets down at most by 10%, but it's a midterm correction. By the fourth quarter, markets will be rising again. Value, or let's say cyclicals, are definitely be the place to be, because economies are getting so much momentum. You just look at the amount of stimulus that's being thrown into economies. Central banks are not being particularly cautious at all. Augustine Carstens just said that to you on the interview. You've got huge amounts of fiscal spending coming into America. Biden's latest package, 1.9 trillion, but there's another 3 to 4 trillion slated to come behind that. I mean, these are just eye-watering amounts of money. The concern that markets have got to have is that the US Treasury market, which is the linchpin of all financial markets globally, is heading towards a 30 trillion amount of debt in that market. I mean, these are huge, huge numbers.